What's going on, everyone? My name is Nicholas Merton here at DataDash, and today is August 17th of 2019. Well, folks, I hope you all are having a fantastic day wherever you are. And in today's video, I want to spend some time to not only do a brief overview of the market, but also talk about an article that speaks to a misconception that so many people have around Bitcoin and cryptocurrencies and investing in Bitcoin and cryptocurrencies. So we're going to be diving into that as well. But also towards the end of the video, guys, we have a non-sponsored interview with an individual at the head of on-chain custodian, Alexander, which I really recommend you guys stay around for. It's going to be an interesting interview. But that's going to be the update for today, guys. So let's go ahead and dive right into it. So taking a look over the market over the last 24 hours, we can see here most cryptocurrencies are in the green. Again, slowly exiting out of the no trend scenario area as Bitcoin is up almost 3%. And that has again been Bitcoin getting up into this range here, holding on support here for over 3 days on the basically the Fibonacci fan here that's been drawn since the bottom of the chart. And again, if we continue to hold above the 100-day moving average and get above the 50 and 21-day, this is where I'm looking for pressure to push through. In the sense of market dominance, not much has changed. Market cap as well is obviously, as you can probably guess, relatively flat here. Rebounded a little bit over the last 72 hours, but again, that's just following Bitcoin in this trend. So nothing too crazy or game-changing here. So to keep it simple, guys, again, we'll take a look over the broader market of assets here. Again, no serious trend. We're taking a look at the 7-day here. So we're getting some recovery, but again, a lot of cryptocurrencies down quite heavily after Bitcoin is down over 10% in the last week here. Now, to run through my opinion on some of these plays, XRP again, as I talked about, guys, I'm honestly not thinking we're going to get the momentum we're expecting. It seems as well a lot of the Binance IEOs have been picking up. I'm not eager to touch a lot of these because to me, there's not a lot of fundamental code that's going to push them higher. I do like, for example, Link is holding quite well. Cardano's not off too bad. Let's see here. Matic, again, another one of the IEOs doing quite well. Yeah, there just really isn't many altcoins that excite me, to be fair, guys. I'm giving a brief rundown through these. I usually like to look every morning through this chart. Sometimes I won't have it in the videos, but this is the assets tab on CryptoWatch, our charting sponsor on the channel, and I just basically I'll go through and see a summary and stuff, and honestly, there just isn't many that really excite me right now. I really think, Link, Base Contention Token, and Raven are like my 3 gems that I'm watching this year. Again, there's no guarantee they're going to go up or outpace Bitcoin. You got to determine that for yourself. But those are the ones that I'm most heavily exposed to, that I was, that I'm currently watching at the moment. And that might change throughout the year and stuff. Again, who knows? So, all right. So let's go ahead and talk about this article here, guys. And if there is a financial news website you should not get your news or your opinion pieces from, and that you should see as nothing more than a scheme to simply just get people onto their programs, getting the inside information that top tier investors know in order to make $1 million, off these 1 or 2 stock picks. It's the Motley Fool. Do not read the Motley. It's just my opinion. You guys can go do what you want. I really dislike the Motley Fool. This is like, this is the article that someone reads a day or two into, or an article website that people read a day or two into investing, and they eat it up like, because they don't really know much. They don't really know about personal finance and things of that sort. Well, anyways, I think the author here was trying to do some justice here in the sense of keeping people from exposing themselves to too much risk. And I'm going to showcase in this article why he's, in my opinion, blatantly wrong. And I hate when a lot of people who don't understand Bitcoin on a fundamental level and also understand how generically even professional investors say you should invest in Bitcoin. He doesn't get this in this article, so we'll talk about it. So the article is titled, "Forget Bitcoin, I'd rather buy the FTSE 250 dividend stocks, general like ETF in this case, to get rich and retire early." So to give you some clarification, the FTSE 250 is an index in this case, as the NASDAQ and the Dow Jones is. And this is a specific variation of the FTSE in this case that has 250 dividend stocks that pay an average of 3% every year. Well, sounds pretty good, right? It's not a bad deal whatsoever. Well, the thing about it here is that he goes on talking about how Bitcoin is high risk. So I'll go ahead and read his paragraph here. Just want to make sure we get the full context. While Bitcoin has the potential to move higher, its risks appear to be big. Unlike other assets such as shares, bonds, and property, the virtual currency lacks fundamentals. This makes it impossible for investors to determine whether or not it's fairly priced at the present time. This means that it carries a considerable amount of risk. Looking ahead, the potential for Bitcoin to replace traditional currencies seems to be relatively low. It has a limited size, while regulatory risks remain high. As such, while virtual currencies may eventually become more of the norm for consumers across the globe, Bitcoin itself may not be adopted on the scale some investors are anticipating. This may mean that the optimism has been present through 2019 ultimately fades away over the coming years. Okay, so let's go over and clear up a few things here. This idea that Bitcoin lacks fundamentals, it is absolutely fundamental. And the reason why Bitcoin is fundamental is because unlike a central bank cryptocurrency, well, they are making those. Unlike a central bank currency, and unlike stocks that can be diluted, and currencies that can be diluted, and bonds and treasuries that get printed up every single day, and properties as well, not to mention other types of assets that, again, have plenty of potential to continue growing, and there being a larger number of, Bitcoin, being finite, is the most fundamental asset. It is better than gold and silver because of that. You know exactly that there's going to be a limited amount of coins in supply. Not to mention, we know how Bitcoin operates. It's all open source. It's a protocol that anyone can access, be a part of, and participate in. That's as fundamental as it gets. You can call Bitcoin speculative because, it's a new age asset, but you can't call it speculative because you don't understand it. Like, that's like me going and saying, honestly, stocks are just so confusing. They're speculative. Oh, yeah, they might go all the way down to zero. Yeah, of course, stocks can go down to zero. But that's why, for example, when you're investing in these things, if you feel there's too much exposure, if you just go directly into Bitcoin, you can buy other altcoins. You can buy other cryptos in the space. You can mitigate your risk in that case. But in the case here, we've seen Bitcoin has performed quite well, and it's extremely fundamental in nature. Now, he talks in this kind of risk to reward ratio, talking about how, for example, you're much better off in this case investing in the FTSE 250 ETF in his example. So he talked about, as such, with the FTSE 250 having a yield of over 3% and offering impressive long-term growth potential, it could prove a better investment opportunity than Bitcoin. Okay, so I'm going to go ahead and give you guys just some quick perspective to his argument here. He's saying that an ETF, in this case, that pays 3% dividends is a much better risk-to-reward profile in this case. So I'm going to go ahead and kind of do some simple math here. We're going to go ahead here, load this chart here. Now, bear in mind, I think this chart is denominated in Great British Pounds. Either way, might be even better off if I denominate it in dollars. Doesn't matter. I just want to go ahead and give this chart a look here. So we'll see here. Let's take into perspective Bitcoin in 2017, January 1st, right? Right when Bitcoin was, trading around, I think it was around $800 to $1,000. We might have retraced a little bit into the 1st of January. We'll just give or take. Let's say it's at $1,000 because that's not going to work in my favor for my argument. It would be better off if I had it at a lower level to show the return. So Bitcoin from that day on to where we are now has had more than a 10x. Even with the volatile swings, we've gone up to 20K, we've gone down to 3K. If you just simply invested like most people are when they invest in crypto, just like they would in the FTSE 250, you'd be up 10x on your investment. Okay. Now, in the case here for this FTSE 250 index, if we take a look here from the 1st of 2017, you'll see that the price was 18,293. So the index itself has gone up a little less than 600 points since that date for more than 2.5 years. Not that much movement in the index. Now, we have to be fair and factor in those 3% dividends, right? And on an annual basis, they're getting 3% on top of their money. Maybe you do a drip program where you're reinvesting your dividends, okay? I could have Bitcoin as 5% of my portfolio, and I've made more of a return than the other 95% in the FTSE 250. Do you see what I'm saying? the return is drastically greater even if I have a fraction of exposure in Bitcoin. And that's my major point, guys. Whereas there are people like me, I will be absolutely transparent and fair with you guys. I've told you before on the channel, I'm dramatically overexposed to cryptocurrencies compared to what I'd recommend for the average Joe. And the reason why is because I spend my entire life around this technology. I breathe it, I understand it, and I understand at my age, I'm very fine with taking the risk here. I think there's a grand opportunity at hand, in my opinion. But at the same time, you have to determine that risk to reward profile for yourself. And even though I know some of you out there have the same kind of exposure that I do, or a decent amount of exposure, for the people out there who don't have any exposure yet, it is foolish to think, especially if you're going off a diversified strategy, that if you even understand the potential behind Bitcoin, to completely discredit it, to say because it's volatile or it's new, it's only been around for about 10 years. Those are the things that I get excited about because I invest for the long term in a lot of cases. I look for the macro trends, the new trends popping up. And when I see something like Bitcoin that has set new lows every single time, higher lows at that, and higher highs in every single cycle, and in a matter of 10 years has massively outpaced any financial asset, that's not something you write off as, oh, it's high risk. Seriously? I mean, let's not even compare it to the stock market over the last 10 years. Even in the longest economic expansion, one of the best bull markets we've seen, Bitcoin has crushed every single asset. Absolutely, to the end. So that's my point here, guys. I hope you enjoyed the video here. We're going to go ahead and take a look with our interview with Alexander from OnChain. It's going to be a really good interview. Hope you guys will stick around for it. But until the next update, I'll see you guys in the next one. Let's go ahead and jump into the interview. Alrighty, everyone. So today we're going to be spending some quality time with an individual who I've been meaning to talk to for some time, named Alexander Kesh. He is the co-founder and CEO of OnChain Custodian. Alexander, thank you for spending some time to sit down with me. I think this is a really interesting topic on custody. So I think, well, better not to talking to someone than someone who's been one of the leaders in the space right now.
It's very nice to meet you as well.
Awesome. So I want to spend some time to kind of start off with a general question here. I think a lot of people hear the term custody and they not only don't have a clear definition of exactly what custody is of cryptocurrencies, but why it's so important in this case, why I think it's one of the biggest problems that regulators have brought forward when it comes to cryptocurrencies. So could you spend some time clarifying why custody is so important on cryptocurrencies versus these other asset classes that we might know like stocks or bonds?
Well, actually, custody is quite important in the stocks and bonds area as well. That's where I'm coming from. I used to work for the Bank of New York Mellon, and it was one of the biggest global custodian in the world. And their job, which is very similar to what the custodians would do in the crypto space, is really to take a trusted third-party role in the management of assets. So asset managers like BlackRock or Fidelity in the world would invest in equity and bonds. They don't technically manage those assets themselves in the sense that they don't take care of any corporate actions or any events that would impact those assets. Custodians do that, and the reason why it's custodians because there's a need for the investors behind Fidelity or behind BlackRock to have certainty that those assets and their positions and their holdings will be managed in a neutral and auditable way. It's not that they don't trust BlackRock or Fidelity to do it. It's just that custodians brings an extra layer of third-party independence in the management of assets. So when the crypto space started, of course, the concept of crypto is that everybody owns its own assets, right? It's the decentralized world where I buy Bitcoin, I hold them on a device, and everything is fine. That works pretty well for individual investors. Like me, for example, but when you hold millions in crypto or in tokens, dozens of millions, it starts to be a bit hefty and risky to manage those assets on hardware devices that you put into a safe or in a drawer. You have to go enterprise grade. You have to work with parties that focuses on building the right technological and operational environment to ensure that not only those assets are managed in a third-party independent way, but in the case of assets like cryptocurrencies in a secure, cyber secure way. So that's why you have quite a lot of custodians, I would say, emerging for the moment in the crypto space is really to bring security, both operationally and technologically, to those assets holdings, as well as neutrality in the way those assets are managed.
Yeah, and it seems like, and tell me if I'm wrong, this Alexander. Basically, it seems as if in the case of traditional assets, the problem is more making sure that we have a consensus on how we have a guarantee of who owns what. In this case, I think we've had some issues with that in securities previously. With, for example, some what was one of the major Dole Foods was, for example, one of the fruit companies that had an overproduction of the amount of security shares for their company. So I think that's more the problem in the traditional space. Whereas in this space, it's more
Correct.
about guaranteeing of making sure that no one can get access to those private keys who don't own them in this case, and making sure that not one sole proprietor person has access to those keys. So we obviously know blockchain networks can reach the consensus in that case. It's more about the security over those private keys.
Absolutely, absolutely. So the primary objective is security, but you still have this neutrality play to that still makes a lot of sense. I mean, especially at the very beginning of the industry that the crypto industry we are at now. I mean, how do you know your the crypto exchanges you're using are holding these assets? Are they commingled? Are they segregated? It's very opaque at this stage, and I think custody can bring some transparency on how those assets are managed, on whether they are effectively segregated, if it's for institutional players into wallets that belongs and only belongs to those institutional players, and ensure that it's managed properly in a third part in a neutral way and an independent way.
I love how you brought that up, the auditability in this case that can come from custodial managers, because it's not only one worry that I have in the sense of these exchanges or family funds. I think you mentioned in a previous interview some like horror stories that you had people managing, their keys on a flash drive or emailing private keys in order to send
Yes,
transactions.
absolutely.
I mean, these terrible horror stories. This is one thing. It's just that some of these companies, though they can provide great exchange services, they're not built for custodianship, or they don't really know the best methods. So it might be good to outsource. But along with that, the auditability, and that's a big thing that I've tried to talk about on the channel, which is that there's so many people out there who see these exchanges with large volume and things of that sort, but there's no guarantee that they actually have the assets there, or that if your holdings are on there, that they actually have those in cold storage if you've imported them into the exchange. So I think that that's extremely important. Now, in the sense of our current scenario, like we kind of hinted to, your target audience right now are family funds, big scale investors. Is there any way you can kind of give us some insight as to how you guys kind of bring a level of professionalism or help improve the industry of custodianship in crypto?
Sure. So the type of players effectively that we are servicing at this stage are smaller crypto exchanges who don't want to manage the cold storage themselves, or the storing of the assets themselves, which is I think it's a good trend that they're looking at experts to do that. Family offices, high net worth, as you mentioned, crypto funds, but also projects. So we still see ICOs in our region, and projects do see a benefit in using a custodian for, again, the independence that they can bring and the accountability that they can bring to their investors, in the sense of being able to not only raise the capital in Ether, Bitcoin, or USDC or USDT, whatever, and keep it safe, but also properly report to their investors how that money is being spent over time. So we're working with projects as well in that area. So the way we do that is very simple. So we've built a robust enterprise-grade platform that allows our users to simply have a single window access to all their assets, or visibility on all the assets they hold in various blockchains. So the advantage that we bring to customers as well is that whatever tokens they invest in, whatever protocol these tokens are built on, we integrate those protocols and in a secure way, and we and are ensure that in one single view they can have a concentration of all their holdings in one go. The way we do that is by today offering cold storage, which is a multi-sig cold storage, whereby the customers has the choice to either participate to the signing process or not. So it's co-managed or full custody. But this is not enough, because cold storage still requires a lot of human intervention. And as we know, cyber attacks are often operated or launched via human interventions or via
Yeah, it's
corrupting
human error
humans.
that usually leads to most
Exactly.
hacks. Yes.
Exactly. So we're looking at solutions that would remove as much as possible any human touch into the process. And that's why we're currently implementing what we called a multi-party computation model, whereby, as you mentioned during our intro before the interview, secrets are spread across multiple devices, multiple geographies, and evoked when required for signing transactions through processes that authenticate the various either players, if they're still human, or systems that are allowed to authorize transaction. So it's not easy to explain. It's a mix of hosting in multiple technological, geographical environment the part of the keys in a way that will be at one point recomposed into one signature before signing on the blockchain. Those keys or those parts of keys are reset on regular basis to ensure that if a hacker would manage to get a hold of all the keys together, which is technically almost impossible, as they would have to hack 5, 6, 7 different places at the same time. Even if they would manage to do that, that would not be very useful because after a couple hours after, it would be reset into new sets of keys, or after a transaction is signed, it would be reset by a new set of keys. So our job is really to create the environment technologically as well as operationally that can evolve over time with the best technologies, the best practices as well in place in the industry to ensure that it's always more and more secure.
Well, I love that you mentioned, for example, first off, thank you for giving me some kind of insight into it. It should be complex. It should have multiple layers. And I love the fact that you talked about
Yes.
changing variables over time. So it's very unpredictable. It's not something that someone could eventually figure out how to do and then be able to breach the system. One thing I'm very curious about, though, Alex, as we kind of talked about earlier, you guys have been focusing on larger scale clients right now. And it seems like you're getting very close, if not that you already have a really prominent solution to helping those clients out. But I'm very curious as well. I dream of a world one day where, for example, right now we use exchanges. We trust a lot of centralized entities. But a lot of people, I think, eventually hope for a world of decentralized exchanges, decentralized services, where we will all be very comfortable with custodianship of our own money. Is there a way that you guys plan down the road, if that does become a reality? Are there any kind of creative ideas that you all have to help out those, for example, who might be more retail participants in custodianship? Because I do believe in that world, as you mentioned, of, for example, kind of individual ownership. But, for example, having a piece of paper in a drawer, or, having to remember where you're keeping these things, sometimes it can be a burden. People love to kind of outsource these things. So is there any kind of unique solutions that you guys are coming up with, or possibly any points to make on that?
Yes. So our objective is clearly at this stage to focus on institutional players and qualified investors for multiple reasons. I think it's easier to manage on a regulatory point of view for a startup fintech like us, but also because we want to prove our technology as well as our processes with players that are that understands the complexity of managing those type of assets and are ready to help us actually even in a co-creation way to create the best solutions for the future. But I do see definitely the opportunity for allowing the technology, or allowing access to the technology and the processes that we are putting in place for more retail investors. It would then be a way for them to not necessarily store all their assets, but maybe the assets that they decide to hold on, a little bit like a bank where you keep cash home and because you need some cash to do some of your activities, but you still keep most of your assets in a bank. And it's not only because of the trust that you have in the bank. I'm not sure many people have trust in banks anymore. It's really
Most
more.
in
It's
crypto,
more.
probably not.
Exactly. It's more a question of conveniency. So it's convenient. It's more
Right.
convenient to do that this way. And it also gives you access to financial products that you wouldn't have access to, or with more difficulties if you would do everything yourself.
Yeah.
So what do I mean by that? Lending, for example, or staking, or all those type of value-added services on top of custody that can provide you with an interest or a return on the assets that you hold.
Yeah, I mean, I can see the value for it. The one thing I think about, like, in the sense of whether it's institutional or retail, is I love technologies like Shamir secret sharing in this case, where you can basically
Hmm.
fractionalize a key in this case, and you need a certain amount of maybe say 3 out of 5 keys or 5 out of 7. It really can go as
That's
far
right.
as you want, and I think that that's really cool. It seems like you guys are using that to some degree, and I think that that
Hmm.
will be. I kind of envision a future where companies like on-chain custodian and maybe other participants and stuff, you'll basically go through 3 out of 5 of these major custodial companies and getting a part fractions of your keys in this case in order to get enough to actually withdraw funds, things of that sort. But again, I think you guys are doing some really incredible work, Alex. If people wanted to learn a little bit more about what you all are doing, and if they wanted to maybe possibly work with you all, where can they find out more info about what you're doing?
So we obviously have a website on custodian.com. I'm communicating a lot on LinkedIn as well, so people are. I'm happy for them to connect or follow my communication and the company's communication via LinkedIn and Twitter. And we try to be as present as possible in forums and events because there is still a lot of education to be done in that space. So even for the institutional players, the horror story you mentioned earlier, they still happen today. I mean, it's incredible for someone like me coming from the traditional banking space that you would send a password because that's what you do via email to another operator for signing a transaction, but that's still happening today. So there's still a lot of education to be done, and we participate to as many forums as we can to and not only on the crypto space but also in the traditional capital market space to explain that there are solutions being put in place to help with investments in those assets and that they should be trusted.
Yeah, as you mentioned, Alex, I mean, you've got your past experience you mentioned as well as your time at Swift and everything. I think coming from that world and seeing kind of some of the unprofessional factors of this very early on space, I think it's
Mm-hmm.
awesome to have someone like yourself with that kind of traditional experience. But again, we will leave the links down below in the description for people who want to look more into it. You guys are welcome to check out their website. Alex, thank you for making the time, man. I really appreciate it. It's definitely a complex topical issue in the crypto space, and I'm glad to see you guys are making some change to hopefully fix all these dramatic hacks that have been going on in the space and make custodianship even easier.
Well, thank you for having me.